Okay guys, so there's 3 buckets when it comes to your savings. So a lot of clients ask me, okay Isaac, so I make $6,000 a month and left over I have $1,000. What do I do with that? This is what you do. You want to break it down in 3 places. The first bucket is for an emergency fund. An emergency fund consists of 3 to 6 months of income. Okay, I'm sorry if you hear the airplane. There we go. So emergency funds, right? 3 to 6 months of income. So if my client is making $6,000 a month, he probably should save up to $18,000 for what? In case of an emergency, he gets fired, he breaks a foot, he can't go to work. Any type of situation, we gotta understand that the bills don't stop. The second bucket is the fun bucket. A lot of people wanna put all their money there. The fun bucket is structured for cars, vacations, hobbies, etc. And the last one, the third bucket, is the retirement bucket. And that is where you start funding your 401ks, your IRAs, your retirement plans, your pensions, your tax-free income. The question I have for you guys today is, what is the biggest percentage of your savings goes towards? So, what is the biggest percentage of your savings? Where does it go? Does it go towards the emergency? Does it go towards the fund bucket? Does it go towards the retirement? So for emergency, from your savings account, you want to be at least setting aside 20%. So from those $1,000, you want to set aside $200. Okay? From there, for the fun bucket, a lot of people say the fun bucket, let's throw in the 80%. Let's just have fun. But we can't do that. For the fun bucket, we put in 10%. So if you have $1,000 left over, 100 goes towards that, towards a hobby, towards watching a movie, towards doing something like that. The last 70% goes towards the retirement bucket. So the retirement bucket, why do we put the biggest percentage towards the retirement bucket? The reason being is because we're trying to substitute our income. So in the last couple of years before you retire, if you're living with $80,000 a year, and then at 65, you retire, you still got another 20 to 30 years, statistically speaking, you gotta live with your retirement funds. So you need to be aware that you're trying to substitute your income when it comes to retirement. That's why we put the most amount of money at the end for the retirement, okay? So 20% goes towards the emergency, 10% goes towards the fun bucket, and 70% goes towards retirement, okay? Now, the biggest question is tax-free retirement. That's why I'm here, because the retirement aspect is so important, and it's all about that tax-free retirement. Do you guys know that most of our retirement accounts are gonna be taxed when it comes to the future? At what rate? We don't know, but it's gonna be definitely high. So if you have questions, or if you don't know or don't have clarity on how to be able to get an account tax-free, please send me a message, contact me below. I appreciate you. Have a phenomenal day.